already have questions in the chat. I see them, and one of those people actually emailed us like hours ago and said, "Hey, can you look at some relative Bitcoin charts and crypto charts?" We certainly can, Lexo. So before I do that, I want to just look at my YouTube, confirm we're live. We are live. Hello, everybody. Mr. Strazza. I had shared a couple of charts with you. I don't know where you want to start. If you want to do the Mara Riot chart or the Bitcoin dollar chart.
No, let's talk about it. The request was really, it seems like what they're getting at is what are the best Bitcoin stocks, right?
That's basically the gist of the question.
So I see what Fonz put together here. This is great. I'm just going to do it live if that's cool.
Perfect.
Yeah. So it seems like right now, right, you always want to ask yourself, if you're investing in a theme, this theme would be crypto. Am I buying the best available option for my money, right? Like you want to buy that crypto asset that is outperforming all other crypto assets. So in the case of a crypto stock, you still want to benchmark it against things like not just the S&P, but crypto itself, right? And other crypto stocks. If it's a altcoin, you want to make sure it's outperforming Bitcoin and Ethereum and its peers in the cryptocurrency space, but you also want to make sure it's outperforming something like Riot or Mara or the miners, right? So I think the question revolved around the miners themselves. There's three big ones. None of them are big. Riot, right here. Mara, shown right here. Not as nice, right? Look at Riot. Better look to this one, right? Above last year's highs. Different look to it than Mara. And then there's Hut. Hut 8 mining. At least it's clean. But kind of like Mara in a sense where it's still below the highs from last year. So just from looking at these charts, Riot is the best looking one right now. Let's chart Riot against Mara to make that point. All right, so when you zoom out on Riot versus Mara, nice base. Moving higher out of this base. You got the 200-day moving higher. How about something like MicroStrategy? Let's look at Riot now versus MicroStrategy, which is really just maybe the best Bitcoin ETF, right? It's a spot Bitcoin ETF. Again, nice little reversal here, right? It was underperforming through 21 and all of 22. But now you're seeing this kind of trend reversal take shape in favor of something like Riot. So what I just did here is basically prove out that of the crypto stocks that we're aware of, and here, let's do another one for fun, Coinbase. This is Riot versus Coinbase, right? I'm just trying to make my point very clearly here. I'm sorry about the internet. Oh, no, Coinbase came public in 21, I guess. So that's it, right? So Riot against Coinbase, again, trend is higher, very much so. Now let's check Riot against Bitcoin itself. This is the Riot Bitcoin ratio. Again, a nice base, right? So this one checks all of the relative trend boxes. Spencer, do you agree? I've just charted against did I miss any other crypto asset?
Anything no. I thought you did good. I mean, I guess you see bases. I guess I see downtrends, but to each their own.
You're not right. I mean, you're not wrong. Let's talk about that. That's a great point. You're saying you see downtrends. I see bases. Let's talk about why.
Yeah.
I see the downtrend too. I'm
okay.
not lying. Is that the downtrend you're talking about?
Yeah. I mean, it's the one.
Now, this is the base I'm talking about.
Okay. Yeah.
Does this part of the chart here look different from this part of the chart here?
Sure.
Right. So this is how markets trend. This is how markets cycle. We go from down to sideways. Then things go as planned, up, right? And sometimes sideways lasts a little bit longer than you would think, or down lasts a little bit longer. In this case, sideways has lasted a good amount of time. What is our, big cheat code for figuring out when that long-term trend or that primary trend finally turns? It's this little gray line here, right? So throughout this downtrend, this gray line had crested, rolled over, and the slope was clearly lower. Now it's kind of curling and looks like it's ready to move higher. This is the long-term moving average, 200-day moving average, telling us the trend is definitely not down anymore, maybe sideways still, right? but it's probably sideways to even a upwards bias, right?
Okay.
Just slope of this 200-day.
All right.
And moving higher since February. So that's what I'm talking about. Once the reversal pattern is in, you expect a new uptrend. This relative trend would tell us if we do get a, valid reversal pattern completed here, then it would favor Riot as the, alpha in this relationship in the future. Now, what do? We know that Riot is like the best option right now for a crypto investor. We look at the absolute price chart. Not great. Why? Because crypto's been under pressure. Let's talk about this chart. Do we get a scoop and score? It looks like we might.
What is a scoop and score in this context?
Scoop and score, great question. It's like a bear trap, scoop and score. So let's draw it out here.
Because to me, it's a layup. That's what a scoop and score is.
Yeah, you're not wrong. So look, this is the scoop and score. We have a clear level here. We're above it. We're coiling above it. This all looks, quite constructive here, right? We got what looks to be the base breakout here, right? Back above these August highs. You've heard of these August highs. You've heard us talk about them, I know. We're back above the August highs. We're chopping in what looks to be a bullish continuation pattern. You got the 200-day moving average sloping higher. Everything looks okay. And then what happens? We scoop lower. Stock is making new 2-month lows today, right? So the scoop and score would be something that looks like this. It's a whipsaw, right? Scoop lower, shake everybody out, and then you whip it higher. And it actually does end up being a valid resolution and not a fail, right? Right now, this looks like a fail. A lot of times, fails don't play out the way that we expect them to. You'll get that quick shake or that whipsaw move and then the go. So that's the scoop and score. It's really just a bear trap. What do we mean by bear trap? We're trapping the bears. Bears are looking at this pattern, right? We've gone sideways for 2 months. Now we're resolving lower. Bears are all getting in, shorting this. And if, God forbid, we rip higher tomorrow, they all have to cover, and that creates the score.
You say bear trap. I also say bull shakeout. A lot of people maybe would have had their stop set, mental or otherwise, at that support level, right? And it breached support. I'm gone. Oh shit!
You trap the bears, you get them all short, and that creates that juice and those incremental buyers for the subsequent up leg.
How many times have I, set a stop? The stop gets triggered, and then shit, back up we go.
I do what Sean did yesterday. I have gotten stopped out of a name, gotten back in it, stopped out the next day, back in it, stopped out the next day. I've done it 3-4 times before.
Yep.
And I'm happy to do it. Sean got stopped out of shopping and then got back in literally yesterday morning, like an hour or two later.
It's frustrating. It's why, stop hunting is a thing. Okay. I hope we answered your question, Lexo, in the chat. If you have any more questions, any tickers, drop them in the chat now. The sooner the better, so we can get to them. But before we do that, though, you had asked me to ask you about the S&P value. Was that it? I don't even remember anymore.
Dude, it's important.
IVE? Yeah. Okay.
It's been all about growth stocks, right?
It has been.
Growth stock rally. How do I know it's a bull market? Even the stocks that everyone hates right now and thinks aren't doing well. This is the S&P 500 value factor index. Those are new all-time highs, Spencer. Not many indexes are making new all-time highs. The best stocks are making new all-time highs right now, right? Your Apples, your Microsoft today, Nvidia, right? But the NASDAQ isn't even at new all-time highs.
I'm gonna look at just the top holdings of this thing. I'm sure they're all
all growth stocks, but it doesn't defeat the purpose that they call this the S&P 500 value ETF.
That's stupid.
No, it's not. Here's the problem. They're probably stocks that are experiencing momentum. Oh.
All right. Okay. Top 5. Yeah. But if you go top 10, you get like JP Morgan and Walmart and Cisco and Bank of America and Comcast and Disney and Johnson & Johnson, Procter and Gamble's in the top 10. Or top 15. So yeah.
Value is really just growth at a reasonable price. in most cases. It's true.
I guess it depends how you're referring to value. Because
Nobody wants to buy a stock that isn't growing, I guess is my point, right?
yeah,
If I
okay,
told you that next year Costco's revenues and earnings would be lower than they were this year, it's not a stock you want to buy. It always has to be growth. There's just different levels of growth.
right. Okay, we're being asked from Troy about paint. Sherwin-Williams, SHW.
It's always a bull market for paint. When you zoom out on this chart, there aren't many materials stocks that look better over the years. Just look at this thing. Going back to the 1970s here, guys. So when you see this, right, and you zoom out on a chart like this, what does this tell me? Well, typically, going back 50 years now, if I did buy weakness in this stock, I never regretted it, right? And sure, things change. Relationships change, trends change, trends end. But is this one we really want to doubt? Let's make this point even more clear. This is Sherwin-Williams versus the S&P 500.
Speaking of value,
Sherwin-Williams has been around longer than the Spider S&P 500 ETF. So let's look at it versus the index just to get plenty of history there. Look, this is a leader. This is a secular leader. Sure, does this look like a top? Yeah, it looks toppy, of course. It's a relative trend. Just remember. Does it look toppy there? Yeah. But it's looked toppy before, right? Could draw several of these tops that didn't end up being tops. Okay. So do I want to treat this thing as, something to stay away from? No, never. Sherwin-Williams has proven time and time again that it is a leader. It is a strong stock. Instead, you want to look at something like this and just figure out what's a logical place to define my risk, right? So I would zoom into a trend like this. This looks like a lot of things right now, very basy, right? Not the cleanest. I don't love that. You could draw it something like this. Really hate trend lines. I would try to find a clear level of support and resistance here. Maybe that's it, right? Got a pivot low from June of 21. Some action here in Q1, Q2 of 22. You got the December highs from last year here. Something like that. 265. Not very clean. You don't want to be long this until you get strength above 265. Look at the 200 day, right, Spencer?
yeah, looks pretty clear. Looks pretty clear to me. Okay, here's one from Wavy McFly. He's asking about BSBR, Bank of Santander. We were talking about European banks this morning, so screw it. Let's talk Latin American banks.
Banco Santander. Yeah, but hold on. Before we do, listen, I'm a big paint guy.
What?
Yeah. If you're looking for a paint stock right now, you don't buy Sherwin-Williams. You buy PPG.
Who owns Bear? Do you know who owns Bear? I'm gonna look it up.
Yeah, I do.
Bear owns Bear. Oh, okay. It's good to know.
I thought it was owned by
Or Masco, it says? I don't know.
Yeah, Masco. Yes.
Okay. I don't know what Masco is.
PPG. This is Pittsburgh Paint and Glass.
Oh,
Stock
man.
ever. You got the completed base. It is actually very clean, unlike Sherwin-Williams, right? Look at the shelf of resistance here. Above it, coiling. That's it. You could buy this one right here today, 138. If you want to buy paint stock, I will be buying PPG. Again, whenever you have two close competitors, they both sell paint materials, PPG versus Sherwin-Williams. This will make my point more clearly. This is the relative trend, right? If you want to call these two stocks competitors, which I would, got a nice base shaping up. PPG has been outperforming for over a year now pretty steadily. So I think that's a safe bet.
I had no idea you're a big paint guy. Today I learned.
Look at this and say, I see a downtrend. I would look at this and say, I see a base. And that's what makes markets.
All right. Banco Santander.
Yeah.
Santander. I don't know how it's pronounced. Latin American banks. Wavy is long.
Right? SAN.
Yeah, that's right.
Listen, if you want to buy an overseas bank right now, you buy HSBC. Yeah, this is sloppy. This is way too sloppy for me. Here's the problem. Like, you don't really go to Latin America for the banks. Right?
Yeah, I was going to say, does anyone want Latin American banks? I don't know.
You don't. You don't want Italian banks. You don't want Portuguese banks. You don't want Greek banks. You don't want most banks. Usually you don't want European banks. You want the Canadian banks, you want the Indian banks, and sometimes the US banks. And right now we want HSBC. Santander's just not one that we like. I'll chart it versus, listen, I'm going to do it against European banks just because it's going to show you the same thing. There just aren't many Latin American banks that we don't have an index. We could make one. There might be 5 names in it, but this is messy. This is Santander versus European banks. Now let's look at Santander versus just US financials. That's not bad. Look, they're reversally, but they haven't completed yet. These relative trends are kind of interesting, to be honest, but the chart, it's just not offering much on an absolute basis. I continue to tell people, I think we talked about this on Tuesday, right? So I don't want to repeat myself, but buy the strongest financial stocks. If you think there's going to be rotation into the banks, the rest of the financial complex will probably be trending well if the worst industry group in the financial complex starts to trend well, right? So I would say go look and identify what some of the strongest names are within financials, and they're not going to be banks, and then use those to express a bullish thesis on some sort of a bottom and rally in banks.
Yeah, I just personally, just banks don't excite me at all. What about EMR, Emerson Electric?
I think they do like telephone line things, right? I was just talking to Larry, I think, about this one the other day. Emerson, or was it Eaton? Maybe it was Eaton. Anyway, somebody recently told me what this company does.
I'll tell you what they do.
Electrical products, right?
Yeah. Yeah, it's a
You ever just look at that and say, okay, but what do they really do?
it's
What does that really do?
software is majority interest in Aspen Tech. So
AZPN?
is that Aspen? Maybe. I guess Emerson has a majority interest in that. They sell automation equipment. That's what they do.
What's been going on with these guys?
Wait, but go back to EMR.
It doesn't excite me. What I would say is when you zoom out, it's held where it needed to, right? You got the prior cycle highs from 2018 and the pre-COVID highs here. This is 2018, 2020. We came in, we shook lower. Spencer, what would we call this? Hold on, let's see if you're listening.
That would be a bear trap. No, that would be the scoop and score.
That's it. Bear trap, scoop and score. Kind of bull hookish, but that's it. You get what looks like a failure, right? Or a downside resolution, and then it ends up being not that at all, called a failed breakdown, bear trap, scoop and score, but that's a great example of it here. And then look, well-tested level, came back, tested it real clean just here last month. And then when you zoom in, if you really need a position in this one, you got these short-term pivot highs here. Reminds me of something like small caps right now, right? So you would do one of these, boom, boom, call it $88 above there. You're in the clear over a short-term time frame, right? Longer term trend is still messy. Look at that 200-day. Short term, if we're above this 88 level, you probably can get 10-point rally back to 98, the pivot highs there, year-to-date highs.
All right, what about Chewy here? There's someone in my building that orders like a shit ton of Chewy. They're probably keeping the company in business by themselves.
I love Chewy, man.
I have no pets, so I could not care less about Chewy.
I like them. I like what they're about. So let me clean this one up. We've done this one before. So again, big downtrend. Spencer sees the downtrend. Right?
Yeah.
A nice little rectangle here. Whatever. We could draw an arc. We could draw a rectangle. But it's just to show the transition from down to neutral to now maybe up. But we can't make that call until we're, another 20% higher from here, right? So we're trading around 40 today. We got to be back above low 50s, call it 52, 52.50, to call this a completed base. And we want to buy the completed bases. This one is still range bound, right? So yeah, maybe you have a trade back to 50, but the real moves, the real trades happen north of 50 in a stock like this.
Jason is asking if we've looked at Lennar yet. We looked at Lennar this morning, right before the open, I believe, but not since then. So last I checked, the stock was up on its earnings report. Has it held those gains? Some of them.
Yes. And actually, we got a very constructive retest. JC was talking about how much he likes that earnings gap move. I couldn't disagree with him at all. I like it too, but the gap already filled on an intraday basis, right? So we had the gap this morning. I think JC was talking about this morning. We had like, 3.5% on the open. So we opened like right here around 119. And then look what happened in the time since, right? Lennar, like I said, opened here around 119, came all the way back down. You see that lower shadow here, that wick. And where did it stop and find buyers? Right around 117, which were the intraday highs from June 7th, June 12th, June 13th, June 14th, right?
Yep.
So there's that polarity over a very, very tactical time frame. Came back in, checked on it. Now let's zoom out. Looks like a really nice continuation pattern completing here. Let's draw the fib out and give ourselves a target for.
First fib of the day. Look at this.
So there it is, right? We're above 117. This one is long. I think it's new all-time highs. Target of 150 at the 161.8. Let's just double check that those are new all-time highs. Yep, totally. Great looking chart.
All right. Build more homes. Here's what I like from Ravi. XBI. I'm always fascinated by XBI and IBB. I don't know if there are two large industry specific funds like these that diverge in the way that those two often do.
You know what it is, Spencer? There's just so many of these things, right? So
yeah.
like the Cell Genes and Amgens will dominate IBB, but then there's 500 biotech stocks. When you equal weight it,
yep,
it's gonna look a lot different, right?
Yeah,
like we always have those major players in the biotech space.
Yeah, like what is the four? Was it the 5 horsemen? The 4 horsemen? I don't remember.
I think Celgene's gone now, right? We lost Celgene. Didn't we lose Biogen too?
Oh gosh, no, Biogen's around. Did we lose Gilead?
No, they just go down every day. So
all right. What were the 4 horsemen? It was Gilead.
Biogen.
Biogen. Was it like Bluebird? Did I make that up? I may have made that up. Oh my God, Bluebird Bio is $4. Oh God.
Remember this one? Look at this. Let's zoom out on Bluebird Bio.
Oh no. Wait, what was it? Oh, was it Kite? Jazz? Kite? One of them bought. I think Jazz bought Kite.
Jazz and Kite are gone now. I'm talking about the big bios. You're talking about the acquisition.
Sorry. Yeah, I'm getting into it here.
Look at Bluebird, dude. 150 to 4. That's what being a biotech investor is like.
Sometimes. Come on now. All right.
XBI.
Yeah.
This is equal weight, just to be clear. We were just discussing kind of the difference between the two. It's not ready yet, right? So again, notice the theme. Downtrend, sideways trend. We're not up yet. We're not up. It's trying, it could be cleaner. I could draw it like this, right? I want ultimate confirmation above this 95, 96 level at the August highs from last year. Year-to-date highs come in a little bit lower, but this base is still working here. There are opportunities in the space, though. I like genomics. Can we talk about TXG?
Yeah, sure. Why not?
Love this base. Really like this base. Genomic stocks look a lot better than biotechs right now, so here's like ARC-G relative to XBI. You got a nice little base there. It looks like it's about to pop higher. All right, so this is just genomics relative to other biotechs. This is the genomics index. Any type of ARC fund is doing pretty well these days. When you look beneath the surface, this 10x genomics looks really good. Sean and I are kicking around some ideas for getting into some calls on this one. Play a little flyer into year end, but
how can you go wrong? It's got 10x in the name.
Dude, I want to go 10x on 10x, but this is the kind of mix that we want to be buying, right? Like we talked about this 200-day moving average, curling higher. We're above like a very clean level of resistance here. It looks like the base is completed. Call it like 54, 55 bucks. Momentum, I would love to see get overbought here in the coming days to confirm this resolution, but let's look at TXG on a relative basis. This is another way that we can get confirmation in the coming days or weeks, right? We want to see momentum get overbought, and we want to see the relative trend make a clean upside resolution from this base, similar to the base that we have on an absolute basis, right? That's what we're really looking for confirmation. If and when we get it, if it happens today, if it happens tomorrow, I'll be in some calls in this name. I'm already in the comment.
Just to follow up, so the four horsemen of the biotech was the thing that Kramer had coined, I think, a decade ago. It was Biogen, which is very volatile. It is Celgene, which I think is off the board. Gilead, which has sucked, and a Regeneron, which is a monster. So
can I just tell you? Can we just do like a quick case study on what it's like to be a healthcare investor, a biotech investor?
Yeah, look at Regeneron, baby. Woo!
You keep saying that Gilead has sucked for so long, right? Something happened up here back in 2015. Do you remember what that was for Gilead?
No.
They literally cured.
Oh, the hepatitis thing, right?
This company did. I mean, of all the biotechs ever, you could literally point to Gilead and say they have made one of the most incredible discoveries in healthcare in our lifetime, right? Everyone with Hep C now doesn't have to worry because of Gilead. What happened to their stock price, though? Curing diseases is not good business. And that's just the world we live in. I'm sorry. Everybody wants subscription revenue, right? The best tech stocks, what do they get? They get subscription revenue. You pay them every month. You go to the pharmacy, the best biotechs, they get subscription revenue. You pay them every month. If you cure a disease, you get paid one time, and then you fall off a cliff. So every other biotech has to look at Gilead and say, do we really want to cure that disease?
Do you really want to do it?
Seriously, I hate to be a pessimist, but
no, you're not wrong. That's the way it is. That's the way it is.
But yeah, look, when you zoom out far enough, Spencer, I mean, Gilead, not a bad base here, right?
Oh boy,
for sure, but clear level here, and this is a big base too. This one looks a lot like IBB, actually. Anyway.
I just this was the stock that we talked about every day, probably in 2015, 2016, and I don't think I've thought about this stock in years.
I forget the public still sometimes.
Yep.
Right. This is one of the hottest names in the market for a while earlier in my career.
That's the way it goes. All right. We are out of time for CRL today. I know there is more tickers in the chat. Sorry, can't get to them all. You'll just have to get here earlier on Tuesday because the show airs every Tuesday and Thursday at 1 p.m. Eastern time right here on Stock Market TV. He's Steve Strazza. I'm Spencer Israel. Drop us a like. Share the show. Share us with your friends, your neighbors. Tell them you watch our show. Tell them if they give us a question, we'll probably address it on this show right now. You can always email us questions at stockmarketmedia.com. If you want to get ahead of the show and say, hey, I have a question for later, then we'll probably address it on the show if you email us. And that's a wrap. What?
This is your show, everybody. This is your show. So let us know what you want. We're happy to do
I definitely will show a bias to people who email us. Put it that way. If you email us, I will make a note to get your question answered on the show.
Email him. Don't email us. Email him.
Questions at stockmarketmedia.com. That's the email. Everyone have a great rest of your day. We'll catch you later.
Thanks for joining, everybody.